Desjardins has initiated coverage of Constellation Software with a buy rating on the stock, my guest says. After an eventful few months, the share price of Constellation does not reflect its long-term value creation potential. Joining me now is Jerome Dubreuil, research analyst, telecom and media at Desjardins Securities. Jerome, thanks very much for joining us.
Thanks for having me, Roger. Good morning.
What are you liking about this group now?
Yeah, what I like about the Constellation family here is really the long-term value creation opportunity. And this really stems from the very long pipeline of M&A opportunity that we're seeing. It's been a while since the company has disclosed this pipeline, but there's no doubt in our mind that the pipeline has kept growing. And at some point, the transactions will be coming back in the CSU story, and this company is extremely good at finding the right opportunities and making the most out of them.
And you've got the three in here, Constellation, Topicus, and Lumen. Is there one that stands out of the three, or all three pretty solid right now, the way you're looking at it?
Yeah, essentially, Constellation, Topicus, and Lumen are essentially the same story, is the same company. Constellation consolidates the revenue from Topicus and Lumen, but we've decided that our favorite one was Lumen among the three, and the reason for that is the track record for higher margin and higher deployment of capital in terms of percentage of free cash flow that was generated. Lumen reported last night, results came in just a touch below our expectations, so there's a bit of weakness today. We think it's a good opportunity in the longer term to get in a very attractive name here.
And overall, how have they handled everything with this?
You mean with the results?
Yeah, and with the three companies.
Yeah, so the results for Lumen that were published last night, the organic growth was a little bit below our expectations. We were looking for 2% growth. They reported -1%, but really the right way to approach it is not putting too much attention on a quarter-to-quarter basis. This is a long-term opportunity. The deals that these companies are going to be closing will come, in our view. We have not seen it this quarter, so there's a bit of disappointment maybe in the market this morning. But overall, we're confident the management is really hard at work identifying new opportunities.
And no concerns about Mark Leonard stepping down?
We thought it was a negative. Obviously, you can't lose someone like this without having some sort of impact. But we think the reaction of the market is a little bit overdone. So basically, we think there is two outstanding questions with regards to the departure of Mark Leonard. So the number one question is, was he the closer, right? So was the company able to close some transaction at a certain price that they wouldn't have able to close otherwise? And the second one is, was it a reason that such a complex organization held well together? But, CSU is one of the most decentralized organizations that we know of at this scale. Their strategy has always been decentralizing. And Mark Miller, has been there for a very long time. And on a call recently, he addressed the concerns, essentially said that the strategy wasn't changing. And most importantly, he basically laid out that he was seeing some room for improvement in terms of their capital deployment processes so that they wouldn't have to lower the hurdle rates on the future acquisitions that the company will be making. So we thought that was reassuring. So, it's a negative, but can be dealt with.
It does feel like Miller brings that continuity, but also brings some fresh eyes too, in a way?
Probably wouldn't go as far as fresh eyes, since he's been there for a very long time, and we think the culture is extremely strong there. But I wouldn't say we need necessarily a new system because of the track record is so stellar there.
And what about AI and all this? I mean, it's what everybody's talking about. What about AI? What kind of a factor is that right now?
Yeah, absolutely. This has hurt the stock quite a bit this year so far. A couple of reasons, but really the more we spoke with developers as we were writing our report, kind of the less concerned we became with the issue. So we think we don't want to dismiss it. We think AI is going to be useful, is going to be helping on the programming side. But really, the software business is much more than a couple of lines of codes. It's really about the integration of the business. There's maintenance, there's security patching. There's just a lot to be done in a software business that is beyond what we think AI is going to bring in the short term. However, we do think that another reason is not necessarily fundamental, but in terms of the flow of funds, a lot of investors don't want to miss the AI train, really. So maybe some of these were into CSU previously and have chosen to direct some of their funds towards some AI opportunities there.
Okay, and last, just before we go, your target prices for it and little reasons why.
Yeah, for the CSU, we have a 5,300 target price at this point, about 40 to 50% upside with the current share price right now. It's really about the value of the M&A pipeline and also, just a solid business with solid margins and solid free cash flow generation there.
Okay. Jerome, thank you very much for joining us.
Awesome. Thanks for having me.
Jerome Dubreuil is a research analyst, telecom and media at Desjardins Securities.